All right, we're back. Our call of the day is Walmart. Why? Because it was upgraded today to outperform at Evercore. The price target to 160. The firm says there's improving traffic trends. There's the stock. It's not doing a whole lot. Stephanie Link today on this call. You own Target. I know you like that one better, but how about this right now?
Well, when I read this note, I kind of said the same thing can be said for Target, right? So they're seeing better top line momentum. They're gaining market share, especially at the upper end. They're defensive for trade down. Inventories are improving. The difference is Target actually trades at 18 times forward. Walmart trades at 24 times forward, and that's why I gravitate more towards Target. But it will be interesting because there is a catalyst for Walmart next week on the 5th of April. They actually have an analyst day. And so I think that they'll have a great long-term kind of, kumbaya moment, if you will, with the analyst community. And I think that's really one of the catalysts for the shares. But
do you think do you think this call is trying to get ahead of that?
I do. But I mean, I don't think they're going to say anything that's going to be really game-changing, but just reinforcing that things are very good at the company, and this is a stable company, and it's a staple too.
Well, you said it's a staple. And here's the problem with some of these staples right now is they're at these high multiples. I think Walmart's at 23. We don't own any really hardcore staples like that.
Well, that's why I said Target. Yeah. Target is now by the way, it is a staple in the Constitution.
Yes, and we own McDonald's. I consider McDonald's a staple. It's a capital-light business, and that's why I like McDonald's. But we're nearly 50% tech right now, so some areas are going to have to be sacrificed, and staples are that because overall, I think they're a little high on multiple, and I'm a little nervous about the consumer, even though I'm more upbeat about the economy broadly.
You're 50% in tech?
Yes, nearly 50% in tech right now. Yeah, we've been like that.
So you're like double the market.
Yes. Well, tech and communication services. But yes, we're very bullish in tech with semiconductors. NVIDIA's our largest position. AMD is number 6. Micron number 4 or 5.
Jimmy, how about Walmart?
You know, I've been telling you for quite some time, I'm looking in retail. I haven't pulled the trigger. Sometimes I feel a little self-incrimination about that.
You consider this, I mean, I feel like they're two different conversations. Retail and this. I mean, right, when you start, as to Steph's point, staples versus retail. Yes, it's a retail establishment, but.
Okay.
You know what I mean?
I'll grant you that, but here's where I'm going. Here's where I was going with that is, in terms of retail in general, whether it's staples or the super discretionary stuff that I'm in, right? Like Win, like GM, right? That is a call on my part that I don't think we're going to have a recession. Scott, yes, I do think the chances have gone up, but I still don't have a recession as my base case. If I started to get into a recessionary mindset, Walmart's exactly what I'm looking at.
Josh Brown, what about you? How do you look at a stock like Walmart?
I wouldn't buy it because I think there's a recession coming. It's not like Walmart loves a recession. Maybe it goes down less than other stocks. If you're really concerned about like macro stuff and recession, don't even bother with stocks. Buy GLD or make that a part of your portfolio. It's about 5% from its all-time high, which it hit in the summer of 2022. A lot of people think gold is an inflation hedge. That's not actually what it does. Gold is the type of instrument that does well when there is mass concern about the banking system or the global economy or whatever. That's what asset managers reach for. They start making it a 1% sleeve in their portfolio. The people that had it at 1 make it 3. Like that's what you want to do here if that's your real concern. I don't do that personally. But taking a look at the technicals in gold, taking a look at the net inflows to gold, just had the first month of net inflows going back to April of 2022, so almost a year since we've seen this. That's the trade that will work in that environment.
I agree with Josh here big time. I mean, I think I like gold a lot. We have a 6.5% with that tech as well. But we also have a 6.5% allocation to gold and gold miners. And Josh pointed the technicals there. Gold's hanging up extremely well, extremely technical. But you got to be careful. It's one of those. It's a very volatile asset. But I'm upbeat right here in the environment that I see going forward with the Fed lifting their foot off the gas, and that's why I'm bullish on tech. I like having gold to lean on in the portfolio and avoid the staples. In fact, if you look at some of the technicals, talking about the Nasdaq, the relative strength of outperformance, using the staples as a denominator to look at a chart with the Qs. The Qs are really breaking out in that pattern right now.